Hi everybody, welcome to another update on the stock screener. Today we got guidance out from Pieridae Energy. So the stock has retraced a bit, not sure why, because natural gas is up. So this is a buying opportunity. So now it has gone back to the bottom and probably the next cycle is up. So this is the guidance, but before we get into that, let's look at the natural gas. Natural gas is, yeah, it had a drop, but now it's back up. So I don't see why Pieridae Energy should be going down. The trend is still bullish. And let's take a look at some other fundamentals. So for next year, and we're ending this year soon, next year oil demand is going to go even higher. So 2 million barrels per day will be added, while supply is only 1 million barrels per day. So I expect oil to go up next year. And this is important because why do I think natural gas is going higher? That's because there is a correlation between oil and natural gas. And if oil goes up next year, that will pull natural gas with it. Also look at coal. This is coal. Coal was at the same price as natural gas for a long time, but it has now started to break out, diverge from natural gas. So this gap also needs to close at some point. And the most important one is, of course, this one. This is the EU gas. Was always correlated here, even at the same price in 2020. But now this has diverged. So I think natural gas has only one way to go, and that's higher. With oil higher, with EU gas higher, we also start to see bottoms in fertilizers, as you can see here, and coal is still up. So this is the last one. The natural gas needs to go up as well, because this is the cheapest energy of all of them. So we stay invested in natural gas. Also, an interesting website here from Celsius Energy. You can see these are the weighted degree days, which means the amount of natural gas that is going to be used is going up in the coming weeks because cold weather is coming. And you can actually click on this and see how it changes. And this blue line here is getting bigger and bigger. So a lot of the temperature is also starting to get more blue. So it is getting colder until the 24th of December, which will, of course, have a demand pull on natural gas. So I expect natural gas to go up in the coming weeks, which will benefit Pieridae Energy. So let's look at the valuations now. So in the news release, we have production at 38,000, which is unchanged. It's the same as this year. Operating income, yeah, around 200 million. Then we have the netback, that's a bit higher than this year. This is the most important item. Sustaining capital has gone up. So it was at 22, now it's 50 to 55. So it has doubled. That's not good, but it's manageable. because we're so undervalued. CAPEX is at 20. So drilling is probably only going to be done in the first quarter, and then they are not going to drill anymore. Maybe if they are allowed to, if the gas prices go up, then they can start drilling again in the winter. But yeah, we need to revise our CAPEX higher from 50 to 70. They used $4.4 per gigajoule as average price, which I think is very low. I think it should be 5 at least. Other than that, they are going to refinance their debt well in advance of the deadline in October. So let's see how they can do this. If they can do this at a very low interest rate, then that will be beneficial to the interest payments. They will be lower. So they're going to pay down debts. Debt should be lower than the EBITDA. Guidance is the same, very low decline rate. So production is going to stay at this level. Drill results are coming out next quarter. There is maintenance, a 5-week maintenance on Waterton. That's about 30% of the production. But okay, the guidance is still 38,000, so no problem. And that's it. So let's look at the valuations. So this has been upped to 70 and it was 50. I also decreased interest from 40 to 30 because I expect them to pay off quite a bit of debt. So the interest payment should go down. And also they are going to refinance. So actually this can be even 25, but I took 30. And the results are still at 4.5. We still have an upside from 180 million currently to at least 500, 600. So that's a double, a minimum double from here. The free cash flow is around 140 million. So that's not bad. That's almost 1 times free cash flow, 1.5 times. So even at 4.5, I go, there is upside. And their hedges are now higher. It's 5.5, 4.5. So it is now very de-risked, and I think this is a very undervalued play. If we actually go to 5 ICO or 5.5, then you can see there's much more upsides, 1 billion in market cap, so a triple. And I think we will be at 5, around 5. So plenty of upside. I think they are going to pay down debt. They have long reserves, lives of 20 years. They are going to drill more, and that will add more reserves because they are unbooked. Production will be around the same here, around 38. So here between these two. So okay, that's of course not that good, but they need to pay off debt first. So production will stay around this level for some time. Yeah, there's nothing you can do about that. ICO prices haven't been updated yet, but they should be higher, I think. Then pipelines are coming for next year, so A lot of pipelines will come online in 2023. That will improve the ICO price. LNG terminals in the long term, 2025 will come online. Drill results coming as well. Good hedges at $4.5 and $5, so that's very good. Excellent wells, and we know that the decline rate is accelerating, so not a lot of supply can come online. So I think this is a good investment, and we continue to hold this. I'll see you in the next video.